Welcome back. In our top business story, the UAE will set up an Emirates development bank that will have a firing power of 10 billion dirhams to help boost economic growth in the Emirates. The bank's funds will be used to help UAE citizens build property, establish a business and fund agriculture or craft-related projects, the UAE Finance Ministry said. The development bank will also provide financial services for small and medium-sized businesses. The new establishment falls in line with the vision of the government to support the nation's economic development and to guarantee coverage of all its short and long-term development requirements, Obaid Humaid Al-Tayeb, Minister of State for Financial Affairs, said in a statement. The UAE may make the largest ever investments in Indonesia's industrial sector. Indonesia's ambassador to the UAE told Reuters the UAE was considering pumping $9.5 billion into aluminum smelter projects in Kalimantan. Emirates Aluminium would invest $4 billion and the Ras Al Khaimah Investment Authority would provide $5.5 billion to build two different aluminum smelter projects in the province. However, Ras Al Khaimah officials denied they wanted to invest in Indonesia. The UAE has jumped 2 places in the rankings of the World Bank's annual Doing Business ranking report. The report focuses on regulations that affect firms in 183 economies, such as starting a business and dealing with insolvency. In this year's World Bank report, the UAE achieved the number 33 spot as it streamlined the requirements for business startups. Saudi Arabia topped the regional list, ranking 12th globally, and Qatar came in at 36 as it provided its credit information systems. The report, titled Doing Business in a More Transparent World, also showed that 11 out of 19 Middle Eastern economies improved business relations over the past year. Alder Property shares posted their biggest gain in a month before announcing the appointment of a chief financial officer. Alder said on October 17th that its board of directors will today appoint a replacement for Shafkat Ali Malik, who resigned earlier this month. With that, let's now look at the stock indices across the GCC. And in our world business news, stock markets in Asia and Europe fell today as rumors spread a meeting of European leaders in Frankfurt yesterday failed to solve differences ahead of an EU summit scheduled for this weekend. Germany and France are said to be divided on their strategy how best to solve the Eurozone debt crisis. Meanwhile, European politicians should not shy away from making drastic changes to the treaties governing the European Union, German Chancellor Angela Merkel said during a goodbye ceremony for ECB President Jean-Claude Trichet. The comments were made while the Greek Parliament gave initial approval for new austerity measures. The bill's passing is crucial as Greece awaits the release of its next bailout tranche from its EU partners, who will meet on October 23rd to discuss ways to solve the debt crisis, because the single currency is at stake.
In spite of all of the turbulences we have been experiencing lately, we can say today the euro has proved itself. It is stable. It is certainly at least as solid and sound as the Deutschmark was in the last decade of its existence, and that this promise of stability still holds true today.
To talk to us more about this subject, we're now joined by Bruce Powers, Head of Research at Trust Securities. Hi, Bruce.
Hi,
good to have you here. Now, what significance does it have, Germany and France arguing about how to best solve the debt crisis? What do you think?
Well, look, it's been 2 years now since the European debt crisis started, and it's really reached a critical point where a comprehensive solution is needed. As far as this weekend, I don't think that we should expect a total solution given the history of how this has gone. Last week we saw markets rally on expectations that they were closer to a solution. Then earlier in the week the German Chancellor dampened the expectations, saying it was going to take a little bit more time. Now we have more reports out this week saying there's still disagreement between the various decision makers. I think this is good, though, that expectations are lower, because any disappointment that comes out of the weekend we won't see as big of an impact on the market. So the markets are kind of being prepared to some degree. Now, we have some disagreement in a number of areas they're still trying to work out, including the forced recapitalization of the banks, which the banks, of course, are against, and what size of haircut to put on the Greek debt, among some other items.
The European crisis is also taking its toll on countries outside of Europe. For instance, China disappointed this week with weaker than expected economic growth. Why is the world watching China so closely, do you think?
Well, not too long ago, China surpassed Japan to become the second largest economy after the United States. Its strong growth has helped support demand for goods from many other countries around the world, including for commodities. So they have a big impact on the world economy. Now, the economy is still growing very strong. What's concerned some investors and economists now is the rate of deceleration, and whether that rate of deceleration is going to increase or whether it's going to stay steady where it is. Now, the Chinese government has been trying to slow down the growth in the economy to guard against inflation and the possibility of a rapid deceleration in growth and possibly a bust. They've done this by tightening credit numerous times over the last year. And then we also have the export markets that have been hurt. So they want the economy to slow down, just not too much too fast.
Exactly. Thank you very much, Bruce. Have a good weekend. Thanks. The Japanese government is stepping up its efforts in combating the surging yen. It set up a forex task force together with the Bank of Japan. According to a draft plan, the new team will monitor and manage progress from measures to cope with the yen's rise, including currency intervention. At the same time, though, while it still can, Japan is trying to take full advantage of its strong yen. The government said it would boost its dollar-based credit facility by $26 billion to help Japanese companies with mergers and acquisitions and other overseas business activities. These plans are set to be approved by the Japanese cabinet tomorrow. Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have the day's sports news for you.